It's almost Christmas. Is the final one for the week and the final one before the holidays begin. Good morning. Welcome to Business Morning here on Channels Television. I'm Ini John Mekwa. Well, let's start off. At least we can do business today before we start the holidays. And we're starting off, as usual, with global oil prices. It rose more than $1 on Friday on expectations of a drop in Russian crude supply, which helped offset worries of a hit to U.S. transport fuel demand growth as a looming Arctic storm threatens travel during the holiday season. Brent crude was up 66 cents to $81.64 a barrel, while U.S. West Texas Intermediate crude was at $78.27 a barrel, and that's up 78 cents. They hit highs of $82.17 and $78.77 respectively earlier in the session. Both contracts were on track to post a second weekly gain, with Brent up 33% and WTI up 5.4%. More than 4,400 U.S. flights have been cancelled over a two-day period because of the winter storm, coinciding with a holiday travel season that some predict could be the busiest ever. However, heating oil demand could be boosted as the extreme weather is expected to cause power outages. However, surging COVID-19 cases in the world's number 2 oil consumer, that's China, the concerns about further rate hikes globally and recession curbing fuel consumption limited oil price gains. Still staying in the market now, but we move over to commodities. Chicago soybean futures ticked higher on Friday, but the market was set to end the week marginally lower as forecasts of rain in drought-hit Argentina's farm belt eased supply concerns. Wheat firmed, with the market on track for a positive finish this week as extremely cold weather across the United States grain belt threatens to curb winter crop production. The most active soybean contracts on the Chicago Board of Trade added 0.1% to $14.74 a barrel, a bushel, and wheat was also up 0.5% to $7.65 for three-quarter a bushel, and corn gained 0.1% to $6.61 for a quarter of a bushel. For the week, soybeans are down around 0.5%. Wheat added 1.6% and corn was up 1.3%. The wheat market is watching forecasts for temperatures well below freezing across the United States plains in the coming days, which may threaten winter crops not insulated by snow cover. Well, we'll come to Nigeria now. We do know that the lawmakers had summoned the central bank governor to have a conversation with him and understand the issue with the cash limit policy. We do know that that meeting has been postponed twice. Yesterday, finally, the central bank governor sent a representative, the deputy governor of the Central Bank of Nigeria, to meet with the lawmakers.
Lawmakers in the House of Representatives received the representative of the central bank governor, Aisha Ahmed, who is in charge of financial system stability. Mrs. Aisha Ahmed is here to brief lawmakers on the new monetary policies of the central bank involving the redesign of the Naira notes and the cash withdrawal limits.
It is to reduce cash processing cost, cash minting cost, processing cost, the cost of destroying old notes, and the cost of moving the cash from place to place, the physical cost of protecting it. The data available to us shows that 94% of all transactions, cash transactions, fall below the 500,000 limit. And this includes in areas in the country that are predominantly cash, that are not part of the cashless policy. 82% of corporate transactions also are below this limit. What does this mean? It means that 94% of all individual transactions will not be affected.
Lawmakers questioned the proximity of the policies to the elections and why Parliament was not carried along in the processes leading up to the final decision.
We are about facing the general election.
Thank you.
And let me just re-echo one line. Are you not seeing it as an opportunity for the ruling party to reach out to opposition parties?
At no time do we make decisions based on any political considerations. And I think it's important that I understate that.
Is the CBN governor not aware of the provisions of the Act with regards to his statutory obligation to address the National Assembly semi-annually, that is 2 times minimum in a year?
If the CBN was aware of this provision of the law, how come the CBN, before even going public with this policy, did not brief the House?
We remain open to continue to engage and do better. When the House convenes these hearings, it is the responsibility of us to show up, and we look forward to you doing so.
Can the CBN tell Nigerians how much was printed out of this new currency? How much was printed?
I'm sorry, I'm not able to share that figure now, only because I want to give an accurate number.
Outside to the chamber, the House Committee Chairman on Defense appraises the interaction.
The policy is very good, we all agree with it, but the only issue we have is with the timing. She also sort of said that Nigeria has 60 million BVNs, right? Population of 200 million. What happens to the people who don't have BVN?
It is not clear what position the House will take after this interaction, considering that it had asked the CBN to suspend the cash withdrawal policy. Terry Ikumi, Channels Television News.
Wonder if that matter has been put to rest, especially since we've seen the CBN adjust the limits from 100,000 naira for individuals for a week to 500,000 naira, and from 500,000 naira to 5 million for corporate companies. We'll see how Nigerians take that. Well, not far away from that, the federal government is asking that senators allow for the restructuring of the ways and means borrowing from the Central Bank of Nigeria, converting the debt to a 40-year bonds at 9% interest rate. What does it really mean, all of these figures and all of these requests? Well, we have Kelvin Emmanuel, the Chief Executive Officer of Dairy Hills, joining us from our Abuja studio. Hi, Kelvin. Good morning.
Thank you for having me, and compliments of the season to you and everyone viewing us today.
All right. So, Kelvin, tell us, what does it mean when the federal government is asking for restructuring of the ways and means? We do know that the ways and means is the CBN borrowings to the federal government, but when they ask for restructuring of the 23.7 trillion naira, what does it mean?
Thank you. So for me to explain what it means, it's important for us to understand that in the CBN Act, the Act that establishes the CBN, as amended in 2007, Sections 38 specifically states that the CBN is a lender of last resort to the federal government. And in situations where the central bank the federal government has a shortage and doesn't have any wiggle room for covering up budget deficits, for example, the Central Bank of Nigeria's lender of last resort is obligated to use quantitative easing, which is a means through which it generates money it doesn't have value for because it's a central bank, and lends to the federal government. And that limit says 5% of real revenues for the previous accounting year. And if you look at 5% of real revenues for previous accounting year, it's between 450 million and 500 million USD. But you have a situation where the CBN has violated that act, and they've generated through quantitative easing about 105 times, which brings that window currently to about 49.2 billion US dollars. It means that CBN generated cash it doesn't have value for, either in storage or in foreign reserves, to the tune of about 23.7 trillion naira, in violation of Sections 38 of the Ways and Means Act, which basically gives you like advances and turns into overdraft, attracting about 0.5% on a monthly basis to the federal government. So now you have a situation where, because of this, there was too much cash supply into the economy, and you have inflation, which is a result, which is currently about 21.43%, for 21.73% for 30%, if I'm not mistaken, for core, and about 23.73% for food inflation. And you have a serious devaluation of the naira, You have like a reduction in purchasing power of Nigerians. And then you have a corresponding ratings downgrade by Fitch and Moody's. You've seen local and foreign currency issuer ratings downgraded to B-. That has taken the spreads and the yields on bonds, government bonds, up from about 13.8, 14% to about 17.8, 18%. And this is some style, the kind of issues that Sri Lanka had, Ghana had, Lebanon had, that currently cause Ghana to default on its bonds. So right now, the federal government cannot pay back these loans to the central bank. It's opted to restructure these loans into a 40-year government bond. And it's offering the market at 9%. I don't think any sensible investor is going to buy that bonds at 9%. And what it means basically is that whenever short-term debts, the yields on short-term debts is higher than the yields on long-term debt, it means that your bond yield curve is flattening and very soon is going to begin to invert. And when that happens, it's a sign that you're in a recession because the GDP numbers show that it's dropped over 1%. So what you have basically is a situation where there is a huge budget deficit because the revenue to GDP ratio in Nigeria is 7%. The government is struggling to generate revenues to fund its budget, which is going to go about 20 trillion naira for 2023 Appropriation Act, and is having to rely on the central bank to use quantitative easing to generate money it doesn't have value for to fund its budget.
So this conversion now to bonds, obviously Nigeria is still going to have to pay back. So we're talking about more debt servicing. I know that the Economist intelligence unit had warned already that some African countries are going to have heavy debt servicing next year, even though they did not mention Nigeria, but we do know that we're at a threshold at this time. But what really does this do to the economy? And especially when you look at the incoming government, this will be their burden to bear.
Well, you know, it's a very bad situation because the debt to GDP ratio is going to rise by around 10%, from 24% to about 34.5%, if I'm not wrong. And this also, you know, hits, it's warning bells, it's alarm bells. It hits the Fiscal Responsibility Act crisis level of 40% of debt to GDP ratio as danger level. And this is the reason why I believe that the DG of the Debt Management Office it's time for her to sit all the adults in the room and tell them that, look, we're on an unsustainable path for our fiscal strategy paper in a medium-term expenditure framework, and the road we're going on is going to lead us to the Ghana type of situation. You know, you have the debt on GDP rising from about 1.75% to about 2.5%. Nigeria's credit default swaps, which is basically like a premium that foreign creditors charge or traders charge in the markets to, you know, bet against the fact that Nigeria is going to default on its debt, has risen by 400 basis points, about 1,300 basis points. Ghana, with the situation it is easing now, right now, Ghana has the 5th largest credit default swaps in the world, only after countries like Ukraine, El Salvador, Egypt, Ethiopia. And for you to think that at the situation Ghana is in now, Ghana's credit default swap is currently at about 2,100 basis points, or 21%. Nigeria is at 1,350 basis points, or 13.5%. You know, so going forward, if in 2023, next president, based on the Appropriation Act that has been sent to National Assembly, needs to borrow $20 billion in order to fund the budget for 2023. The next president has an option to either raise the debt to GDP, the revenue to GDP ratio from 7%. He needs to raise it by 5% in order to be able to fund the 2023 budget without relying on borrowing, selling more Euro bonds, which foreign investors don't want to buy, or without relying on the CBN ways and means lending window, for which Mr. President has already written in National Assembly to allow CBN to lend them another 819 billion naira. And I'll tell you what, I have a couple of suggestions for the Federal Executive Council. First of all, I believe that it's important for the National Assembly, this one is for National Assembly, to amend the CBN Act, Sections 38, to say that in the future, the CBN will need to seek for 2/3 majority approval from the upper and lower house of National Assembly in order for it to violate that 5% limit for real revenues of previous accounting year, which is Ways and Means lending. So without approval from the National Assembly, Ways and Means Committee, and the voting at the floor of both houses, upper and lower houses, the CBN cannot exceed that limit, which has caused a lot of cataclysmic effect, negative impact to the economy. On the other hand, if you look at the Finance Act amendment that was sent to the National Assembly for approval and passage, you note a few important changes. There are changes to VAT. First of all, I don't want to go into the broader issues on principles of derivation and how it's important for devolving powers to the center, exclusive legislative list, concurrent and residual lists, and how it's important for the federal government, the next president, to consider the proposal of Governor Wike to actually have states collect their own VAT and personal income tax, the states to generate their revenue so that they can compete, and states should be in control of their resources and pay royalties to the federal government. I don't want to go into that discussion because it's another kind of worms entirely. But I want to talk about specific changes that can help the next president to generate revenues to avoid the debt trap that we're currently in. Number one, the fact that the finance minister has proposed for a single 50% tax credit on qualifying expenditure for downstream companies investing in gas, investing in drying, investing in purifying, either liquefaction or compression into compressed natural gas, CNG, or building pipeline infrastructure around Nigeria. The fact that she's also proposed that upstream companies are going to have to pay a punitive corporate income tax penalty from 30% that is currently on ground to 50% when that act is approved by the National Assembly for upstream companies that refuse to capture gas and decide to flare it in case where you don't have natural emergencies. I don't think that the solution alone is increasing the punitive damage that upstream companies in oil and gas pay. I don't think the solution necessarily is in giving them a 50% tax, single tax credit on qualifying expenditure, which is, a little bit similar to National Industrial Tax Relief Act and pioneer status for companies. It hasn't done much to incentivize institutional capital to come in. Right. If you speak to members of National Gas Association, both on the upstream, midstream, and downstream, they'll tell you that they have two major problems in it. Two major problems. And they'll tell you that the problems that they have that are stifled investment in gas sector, that is key, by the way. Gas is very key to helping Nigeria raise that revenue to GDP ratio. The two problems they've had, number one, is the fact that you have a wide gap between the official and parallel market rates, yes, which has cost the central bank, for example, to use $190 million to incentivize about $9.7 billion in FX flows into Nigeria in its ROT 200 program that I believe is a failure, by the way. You need to float the exchange rate, change the exchange rate mechanism, float it, have a single exchange rate.
All right, Kelvin.
Incentivize companies to bring in their capital so that they don't have to worry about pricing their risk for either profit or capital repatriation. Number two issue the members of National Gas Association will tell you is the fact that currently, as we speak, the Nigerian Gas Management Company, NGMC, actually has refused to deregulate the price of gas in Nigeria to allow gas to float according to international pricing benchmark or the Bent formula where gas tracks diesel prices by 40%. These are two major issues. If the government can address these issues, it can unlock institutional capital, and it will see that gas will become a major stay for revenue generation and help the next president to be able to increase his revenue to GDP ratio to SSA standards from 7% to 12%, which is what he needs to avoid the trap
Thank you so much for those suggestions. We do know that we can never talk enough about the way forward for Nigeria, but thank you so much for bringing some light into especially that ways and means restructuring which the federal government is proposing at this time. Thank you, and compliments of the season.
Thank you. Compliments of the season to you too.
So we'll take a break now. When we come back from that break, here we have other conversations. Kelvin was talking about how we can boost revenue into the country. We'll talk about that and much more here in Business Morning on Channels Television. Welcome back. Still watching Business Morning here on Channels Television, talking about how Nigeria can attract more investment into the country, especially in the non-oil sector, even in the non-oil sector. In recent times, we've had foreign oil companies exit the country, exit the sector. And in January, Nigeria dropped 5 places on the 2021 Corruption Perception Index, published by the Transparency International. In August, Nigeria ranked 75th on Global Safety Perception Index as insecurity worsened. And so what is all this doing to our country? What is all this doing to investment? We have Sir Steve Omojafo joining us for that conversation now. Sir Steve Omojafo is the chairman of STB McCann, is also the chairman board of trustees, Augustine Catholic University in Ekpe, joining us. Sir Steve, good morning, sir. Thank you for your time this morning.
Good morning, Amy. I'm happy to be here.
Good to have you, sir. So you've been in the business of branding for decades. I've known you for decades. Tell us, when we talk about the brand Nigeria, from the perspective of attracting investment, where are we? How do we look like as Nigeria?
Truth of the matter is that Nigeria has refused to be branded. And what I mean by that is that we have a country where absolutely nothing goes right. People do what they like. Corruption is getting higher and higher. In the recent times, banditry, kidnapping, terrorism has taken over the entire firmament of Nigeria. So when we talk about branding, Nigeria has refused to be branded because from the leadership to the least, it's a laissez-faire attitude. Nobody cares about a good name of this country. We have our green passport, green color passport, which is virtually rejected or not respected. Even our national flag, which are the symbols of branding, is just not carrying us anywhere. So a lot of attempts have been done to rebrand Nigeria. The last one we did, we talked about great people, great nation. Yes, the people might be great, but the nation as a whole has refused to be great or to improve in all aspects of human endeavors. So what we have is a country where nothing works right, where criminality, and all vices that you should throw away are gaining momentum by the day. So we ask ourselves, what is the country doing? What are our leaders doing? And how can we get out of this quagmire?
Yeah, but Sir Steve, how much of this is reality and how much is just a perception? Because in this same Nigeria, some of us are living here, working here, making progress, at least to an extent. And also, you still have a lot of foreigners looking or seeing the opportunities in this same Nigeria. So how much of all of this is reality and how much of it is just perception?
Okay. Now, image building or branding is all about perception. Right. I do agree that we are managing to keep going. No problem with that. But we are not reaching our potential. 60-something years after independence, a lot of things are not right. Now, for the foreigners, they find an easy way in Nigeria to make so much money. The kind of money they cannot make in Europe, they cannot make in the United States of America, or even in places like Japan or China, they come to Nigeria. It's so easy to make money in Nigeria. You will agree with me, production is virtually zero. Let's talk about 25% is probably all Nigeria does in terms of production. But when it comes to importing, that's where our forte, our strength is. So what do you have? These foreigners are flocking into Nigeria, flocking into Abuja, and working with corrupt officials down the line to ensure they got contracts for importing virtually everything into this country. How many of these foreigners are coming to set up plants to produce? Even the oil you are talking about, our refineries are not working. And these foreigners are not coming here, for instance, to help us fix our refineries. They are coming to get contracts and importation certificates to flood the country with anything that they can imagine. Of course, we are there supporting them. So for me, 25% of this country must still be working right, because we are working, we are adding something, people are flocking into this country. But when we come to the nitty-gritty, we are about 75% short of where Nigeria should be. If only we could get our stumps right and we can go more into production and refining our raw materials so that it comes back as fine, and then we can we can now export those things and not depend just on importation.
All right, so would you say, sir, that the solution lies with, because you did talk about the fact that nobody's actually branding Nigeria. We do know that we have the National Orientation Agency, which is supposed to intentionally work on branding Nigeria. So would you say the way forward is the duties of the National Orientation Agency in branding the country, or would you say it is with ministries of government working with private sector, like as you say, work on production, increasing manufacturing for more export? Where do you think it lies in moving forward?
So many times the advertising industry or the marketing communications industry have offered to work with government. Nothing comes out of it. The national orientation movement don't seem to understand exactly what it means to give this country a good name. It's all about politics in Nigeria. We offered as a group, as an association, to help brand Nigeria even for free. No, nobody is interested in that. It's more of, let us all be together as a ministry, as an agency, as a department to do it on our own. And those things are so technical. A lot of expertise is required. For instance, who is the Nigerian? What are the values that hold Nigeria together today? What are our aspirations? What would we rather do to change this country and give it a brand new name, a brand new perception, and people don't see us as where they just come, get incorporated, start moving all kinds of rejected products out of this country into here. And of course, we are made to buy it. So Nigeria, the orientation company or the orientation department of the federal government have done their best, but they need expertise. They need to work with the relevant advertising and marketing association to be able to get Nigeria into where we are or where we should be. All
right, Sir Steve Omojafo, thank you so much for sharing part of your wealth of experience with us this morning, talking about branding Nigeria. Because even as we celebrate, we want to travel. And as you said, the perception on our green passport is something we don't really want to talk about at this time.
No, not at all.
Well, thank you so much. Thank you so much, Steve Omojafo.
But please, let me end up by asking Nigerians who are you use the word jackpying out of this country. I think it's a shame. It's a big shame. And that word is offensive to me, because I believe that running away doesn't solve a problem. And to crown it up, people who are there are waiting to be evacuated back into this country. Let us stay here. Let us work here. Let us put everything in place to make Nigeria an attractive place for Nigerians to live in.
All right,
Thank you.
Steve, let's stop jackpying from
Absolutely. Our solution is right here in Nigeria.
All right, thank you so much. Sir Steve Omojafor is the chairman, STB McCann Group. Thank you so much for sharing your thoughts with us this morning.
Thank you so much, Edie. Well done.
Yes,
well
sir,
done.
thank you.
Thank you.
So not very far away from there, when we talk about branding or we talk about attracting investment into the country, then we also see, what does Nigeria have? One thing that we do know that we have in Nigeria is tourism. In every 36 states of the country, we have something to show. But the question is, how much patronage are they getting? Or how developed are they? How packaged are they? When Nigerians think of rest or holiday, they think of leaving the country. But we have someone here who is telling us that we can actually do it here in Nigeria. He's Adetunji Fadino, the chairman, Awori Tourism Board. He joins us in the studio. Mr. Awori, sorry, not Mr. Awori, Mr. Fadino, you are Awori, but
thank you.
Thank you so much for coming to join us. Compliments of the season.
Thank you for having me here. Thank you so much.
Great. So
of the season.
Yeah, so you're telling us that we don't need to go abroad, especially as the festivities, the holidays come. We don't need to go abroad to have that holiday. We can actually do it in Nigeria.
Yes, of course. Yes, of course. There's a lot here. There's a lot Nigeria is offering. The only problem that I'm looking at is that we have this mentality of it has to be there, not here. And being here, to be honest with you, I have seen quite a lot of windows of opportunities in the Southwest. In the Southwest alone, we have culture, we have heritage, we have archaeological, that we can actually repackage and take it to the global space. If we looked at the North, Aragongo Festival, if we looked at the East, so many things that is there. But what we are looking for right now is somebody to sit down and look at it holistically and repackage it and promote it to the global space.
But we do have a ministry. We have a ministry. We have the minister in charge of tourism and communication. So
the minister is doing a good job, but he could do better. NTDC is also in that window of promoting. But what we are saying, I mean, take for example what Wanle Akibaboye is doing in the corridor of Epe. Epe has a name, but we need a brand. We need a product from that angle.
That's talking about branding again.
And he Wanle take it from nothing to something. Now look at different products. Look at the Awori, from nothing to something. So we need to begin to look at ourselves and repackage our product to the global space.
So the repackaging you're talking about obviously has to do with the realities of infrastructure insufficiency, costs of running these destinations or events, which translate to the consumers. Because, I mean, some time ago I did a calculation, and it's actually then when Cross River State Obudu Cattle Ranch was really there. You could spend much more for air, for road transport, for the accommodation. You spend much more going to Obudu than going to Ghana, for instance, to have a couple of days of work. So these things are discouraging factors.
The reason why it's discouraging is because somebody have to look at, just connecting the dots, look at Calabar to Obudu Cattle Ranch. What do they need there? Just need a bullet train from that place. It reduces the stress. What I'm saying in essence is that there are the opportunities for us here. We need to invest more locally. You know, oil will soon dry away. Tourism is life.
So we have private sector players like you in the sector. So you invest. What are you doing?
To do a festival alone, it costs a lot. Now, there is something we call destination evaluation and destination interpretation. Now, when you look at the destination, you want to evaluate the destination. It costs a lot. It took some people, it can take some people maybe about 10 years to actually look at the product holistically before you take it to the global space. So if you say, look at the capacity building of that angle, one, it takes a lot of money to actually
It's an investment.
Yes,
It should cost you something.
No, it's costing me between the 2008 to today. I would say it has cost me close to almost about around 50 million to actually develop our tourism.
So are you able to recover?
I'm not recovered. Tourism is not something
it's a long-term
investment. So it's something that you come, like I always tell people, like in tourism, your product is experience. So you need to give people a good experience to remember your country for a long time to come.
I guess it's also connected to the conversation we just concluded, the issue of branding. I know that in South Africa, for instance, a lot of South Africans don't leave their country until they die. You know, they just travel to the next province, you know, for holiday and all that. But Nigerians do not have that on their minds. Like, I can go to Obudukato Ranch, for instance, or I can go to Taraba, you know, the hill you have there, you know, for instance, and really chill and have my rest there. So patronage is also going to be another challenge.
It's not. It's that mentality of, I need to be there, not here. Like I was explaining to someone, I said, I've been in Nigeria for the past 10 years. I've not traveled out. I enjoy it here. My children have traveled out. We need to develop our product here that people can come here to see. It's an opportunity for us, sincerely. But I just want us to look at the banking sector, also to help us to look at the investment opportunity in tourism, which I believe strongly that is there. I mean, to do the capacity building alone in the tourism sector, it costs a lot. So the truth is, if they are willing to invest, we're willing to sit down with them.
Well, you bring the investors. I don't know, foreign direct investment. Bring the investment from...
They are willing. But one thing I would say, you know, if you look at the tourism product, there is something we call tourism product and tourism economy. If you look at the product and pick all the products together, and you can connect the products together, you get the tourism economy.
So now, Christmas is in 2 days, Christmas Day, there's Monday, Tuesday, public holiday. Are there any, you know, destination, relaxing spots, you know, that
I can recommend?
Nigerians can chill. Not just in Lagos, I know we're in Lagos.
Well, in Lagos, in Ogun State, there are various places to actually put yourself there and pinch your tent.
You can go to Olumoro.
Olumoro, yes, you can.
You can climb Idore Hills if you have the heart.
Of course you can. Of course you can. Of course you can. Of course you can. And you can also go to like Campine Tropicana if you have the money to spend.
All right. Thank you so much, Mr. Adetiji Fadina, Chairman of Awori Tourism Board.
Thank you for having me here.
It's good to have you here, and we do wish that Nigerians will think more about domestic tourism, domestic destinations, you know, in their choice of relaxation and holiday. Thank you so much.
Thank you.
Compliments once again.
Same here.
Let's take a breather. When we come back, we'll head to the markets. To stay with us. Welcome back. We're heading to the markets now to find out if Santa is heading that way or not. Anita Edet joins us.
Good morning, Ini.
Good morning.
Just is it 2 days to Christmas or 1 day to Christmas?
Yes. 1 day.
Yes.
Because it's just tomorrow in between for 25th.
Yeah. And we're here to see a Santa rally. But surprisingly, all the markets are in the green. It's not what you might call a Santa rally, but at the same time, it's just a bullish climb for the market. So
very moderate gains we've been seeing in the equities.
And most especially is because it's across all the markets, the three markets that I will be giving to you, the viewers. So for Thursday's trading session, the market it's still climbed up, inching. Previously, it was 0.12%, but at the close of Thursday's trading session, this is what you see here, 0.05% increase. Year to date, we're higher. Year to date, we're at 15.88%. Month to date, 3.9%, almost 4%. That's what you see on the board. 49,000 level, almost to the half of 49,000, breaching the 49,500 points. Maybe we'll see that climb higher at the close of today's trading session. At the same time, more than 13 billion was gained at the close of Thursday's trading session. Let's move over to the sectoral performance. A mixed picture is what you see there. The banking sector counter was down, no thanks to some losses by Zenith Bank and some other components of that market. But at the same time, we also saw the impact of Dangote's share price fall hitting the industrial goods sector, which is down by 0.21%, as you can see on the board there. But the gains by the likes of FBN Holdings, as well as GTCO, Access Bank, and as well as Ardova, was able to pull the market into the positive territory. And Ardova, which had lost previously, it regained. So the oil and gas counter was up by 0.26%. Now let's take a look at the activity chart. Activity performance is kind of a mixed picture there. But at the same time, the Reds have it for that market. It's only the deals that was in the positive territory at the close of Thursday's trading session, up by just almost 0.25%. Now, to give us more details on that market, we'll be talking to investment research analyst at Meristem Securities Limited to give us more details about that. But in the meantime, let's move over to the fixed income market. For the fixed income market, it's a bullish run for that market. Average yield, starting first with the bonds market, the average yield there, it contracted by 7 basis points to 13%. But what you see on the board there, that's trading on the FMDQ exchange at the close of Thursday's trading session, the investors' attention was focused mostly on the April 18th, 2037 paper, which had 27 deals worth 18.11 billion naira. Cumulative, what you see here, 333.34 billion naira for that market. And then in terms of the number of deals carried out there, 40. Now let's move over to the Treasury bills market. The Treasury bills market is also a bullish run for that market as well. And speaking of the bonds, investors' demand was much on the January 2026 and the March 2035 papers. But for the Treasury bills market, investors' interest was mostly on the 770-day date to maturity bill, as well as the other mid and long segments of the market. Total number of deals carried out there was just about 6, and the value 1.5 billion naira. Let's move over to the OMO market. The contraction there, we saw a contraction in the yields. It contracted by more than 262 basis points to about 4.3% at the close of Thursday's trading session for that market. Over to the central bank special bills, it was also not too much of activities for that market. But the only concentration was on the 17th of April 2023 paper, which had 9 deals, as you can see on the board there, worth 45.87 billion naira, which is the grand total of what you have here. Now, for the other market, the smaller unlisted securities market, the younger brother of the equities market, that's the NASD OTC market. For that market, we had a reprieve, a slight reprieve for that market, 0.02% gain, in contrast to what you had on Wednesday, which was a 0.71% decline. So that market gained just about 16.61 million naira. Moving over to the activity chart of that market, it's a kind of a mixed picture there for that market, while we had only one gainer at the close of trading session for that market. So that's it for that market. If we can see on the board there, the only gainer there was Fresno Campina. So bullish sentiments had persisted for the 3 consecutive markets that we have here. But for the close of today, all the markets, financial markets, will be heading for the Christmas holiday. So we will be keeping our eyes closed for how it turns out for the fixed income market. We will also be having an FX retail sales by fixed income traders today. The equities market, also we're expecting a bullish close, but not a Santa rally for that market, as well as the unlisted securities markets.
Yeah, thank you so much, Anite. Tomorrow, capital market, I believe, will capture more about what has happened in the markets ahead of the holiday. Thank you so much. Pleasure. So from one market to the other, we have Ladi Williams coming in to tell us if Santa stopped by. Maybe we didn't see Santa at equities. Neither we didn't see Santa at the
I don't think,
NASD.
no, it's not a Santa we're seeing today.
It's
maybe an elf. You know, a very minor elf. Maybe that's what we're seeing.
So minor.
Yeah, just a little elf there.
Oh, my.
Not Santa. But it's 27 points. Talking about the sentiment in the crypto space now, 2700. We've been around this position, this level, for the longest time. this year. Obviously, 2022 has not been the best year for this crypto market. Let's look at the market cap for the total crypto space, $812.55 billion, up 0.51%, just a marginal gain there. $29.65 billion, that's what's traded in the total crypto space. And we see Bitcoin dominance inching downward there, 37.90%. Let's look at the price of Bitcoin this morning, 16,851. We're seeing that a new downward trend forming for the price of Bitcoin, 0.18% uptick we're seeing this morning, just a blip there. Volume traded $16.81 billion. We look at the price of Ethereum, $1,222. That's held on to this $1,200 level for a while now, and all eyes on that $1,000 support, hoping it holds to the end of the year. Volume traded $5.52 billion, a low volume this morning. Let's bring in Gilbert Jopatan, our financial market analyst, to bring us up to speed. Hello, Gilbert.
Yes, good morning, Mr. Ladi.
Good morning. Great to have you, Gilbert, and compliments of the season. Talking about Ethereum there, we see that the Paxful peer-to-peer exchange are planning to remove Ethereum from their platform. Why are they doing that?
Okay, this news came up funny and interesting to me at the same time. First, reuse of the founder of Paxful is a great person and is of value to the industry. I also acknowledge his love and respect for Nigerians. The reason he stated for Paxful removing Ethereum from its exchange includes one, that Ethereum switching from proof of work to proof of stake, according to him, makes Ethereum more of a digital form of fiat. The second reason was that, according to him, Ethereum was controlled by a small group of persons and makes it less decentralized. He also acknowledged the utility of Ethereum in lending, auditing, and in tokenization. But according to him, tokenization had led to a couple of scams, which according to him is stealing Bitcoin momentum. Funny enough, while he's removing Ethereum, he's keeping stable coins like USDT, which uses the Ethereum network. While Paxful has its reason for removing Ethereum, they are kind of funny and crazy to me because they can be debated to be untrue. But what many persons are not talking about is that this is just the cultural crash between the Bitcoin maxis and altcoiners. Tribalism is part of the ecosystem. While they may have their reasons for doing this, we don't need to see one token or one crypto fail for the other to succeed. Each are going to succeed or fail based on their own merit at the end of the day. But cultural wars like this always come up. It makes the ecosystem sometimes interesting, especially during bear markets like this. We always see one strike of cultural wars that always lead to major mainstream sentiment that pushes either Bitcoin to do well or altcoin to do well.
Right, we've always had that, debates there. One coin comes out and says it's going to threaten the leadership, of maybe Bitcoin or Ethereum. So that always happens, in this market.
Yeah.
But thank you so much, Gilbert. Hoping for some kind of, profit this weekend, some kind of weekend Santa rally. Be looking out for that. Thank you so much, Gilbert Jopatan.
Yeah, you're welcome.
All right, let's flip over now. It's not top 5 today. We're doing top 7 gainers. Who topped the list this week? See XDC there, 2 cents, up 10.70%. Just a nice little double-digit gain for this one. There's a top gainer for 7-day trading there. Ton. That's been on an uptrend for a while now. That's up 4.08% for this week. Let's look at the top losers for this week now. See, it's quite a bloody one there with a big drop there. XCN Network, 1 cent. That was trading at 3 cents earlier. See it down 41.26% in 7 days this week. Filecoin there, $2.99, down 28 cents. So we're seeing big double-digit losses from all of these ones here, with Lido down, also down 22% in 7 days. So you see it's a big one.
Yeah, big one.
Yeah.
Big Christmas.
Big red.
Thank you so much, Ladi. See you at 1:30 for Business Incorporated.
All right, see you. Thank you.
So that's it on the program today. And it's safe to say Merry Christmas, and I wish you a very bountiful and joy-filled Christmas. And of course, also try to take a lot of rest. The holiday presents that opportunity. Tomorrow, however, Capital Market will be here 7 p.m. where we'll give you a summary of how the market went all through this week. Just a summary of what you've been having at 10 p.m. and much, much more. For me, I'll see you on Monday. And I'll try to have a great Christmas on Sunday. I'll see you on Monday. Enjoy yourself.